Hello and welcome to the latest episode of the Intelligent Wealth podcast. I'm Tony Byrne. I'm the host of the show. I'm going to introduce you to my colleagues in a moment. But before I do that, let me remind you what the podcast is all about. The podcast is all about investing in shares in great businesses. It's intended for those investors out there who are serious investors who believe in quality investing, which is our approach at our fund management company, Minerva Money Management. So we like to discuss great companies and great themes with my colleagues, which is Carl Roberts here, fellow director, Minerva Money Management, and Awet Girmay, who is our head of research, no less. So anyway, now we need to move on to the main topic of today, which is renewable energy, one of the 7 themes of our fund, the YFS Intelligent Wealth Fund. So I'd probably start off by defining what we mean by renewable energy. I would say it's energy derived from natural sources like the sun, the wind, the sea, water, basically, and harnessing that into a system of producing energy to replace fossil fuels seems to be the whole trend at the moment, and likely to continue for some time. We certainly think it's one of the growth areas. It definitely is, which is why we've included it as one of our 7 themes. So that's where we are today. So, Carl, what do you have to say about it? Fossil fuels and renewable energy. What's your thoughts?
Yeah, renewable energy, it feels like we've been talking about it for years now. It feels like it's been around, this sort of sector of investing for a long, long time. I looked at a bit of research recently. I was actually quite staggered of the progress that hasn't been made. According to the Visual Capitalist, which is a really good website, by the way, for those who are interested in economics, all the data they produce is very visual. So it's really easy to pick up snippets. And recently they published something that at the end of 2023, what powered the world is what they've called it. And yeah, so I was staggered to find that still 81% of the world's energy, 81% is still produced by fossil fuels. And out of that, 32% is still produced by coal. And I just thought, wow, I thought we'd made more progress than that. So the point is really, I think this market is still massive. You know, if we're still only 19% fueling the global economy by renewable energy, there's a long way to go. So I think there's still a sort of massive market to play into here. And we're increasing our energy usage all the time. So since the year 2000, I think global renewable energy has increased by 400%, but we're still at that stage, where it's only producing 19% of the world's energy. So there's just so much potential, I think, still to come. I think in terms of, well, what's going to win out, because that's the tricky one, isn't it? At the moment, I feel like we're still at this stage where we're trying lots of things. We've got wind, we've got solar, we've got hydro, we've got nuclear, and there's not really a clear winner. No. I mean, for some time, nuclear looked like it was going to be the way to go, but then a lot of countries started backing off from that. There was worries about, its safety rate and what to do with kind of waste and things. There's been a big push into kind of wind and solar, but that's a very unreliable source of energy for a lot of countries. So there's still not really a clear winner. I mean, I think to me, nuclear looks like a potential. And in terms of the kind of safety aspects of that, interestingly, another stat is that in terms of deaths per kind of terawatt of power, for nuclear, the deaths are something like 0.03, but deaths from coal production are 24. So there's 24 deaths per terawatt hours compared to 0.03 for nuclear. Yes, I don't know what your thoughts are. What you think is going to be the winner in this race?
What do you think, Awet?
Yeah, I think nuclear would be the winner, because I think nuclear is because there's a more risk into nuclear. There's more cautious approach to it. And I think there was a good breakthrough recently, a scientific breakthrough for nuclear fusion. I think a scientist in the US, some university, they had a breakthrough. They have succeeded to produce more energy than they have provided historically from nuclear fusion for the first time in history. I know that may take a long time to produce, to see the outcome to be applied in real life. But I do think nuclear had more potential in the long term, because it seems to be more sustainable, more powerful, and it can be done easily. And it takes time to create the plants for sure. But companies are coming to solve these problems now. We can see there are a few companies that they could do that in the US. And as long as they can implement them faster and they make them faster, I think that nuclear seems to be the future. Because if you think about the raw material, the problem you have is China control all these raw materials, around 80% of them, and you have the risk that you run into a country where not the best country to deal with. So you don't want to have that risk for sure. So nuclear seems to be the winner. You can produce it, and you can get it. I mean, easily accessible. And I think I'm quite bullish on nuclear. To just give you, to add to your point, Carl, in terms of how big it's going to be, Bloomberg did a study by 2030. I think Bloomberg Energy estimate the renewable energy will receive an investment around 5.1 trillion. So it's a huge market for sure. And as Carl mentioned as well, it's too early. I mean, there's a lot of growth in this phase. So I'm quite optimistic in the long term.
Yeah, I mean, basically, I think this whole net zero fad we're going through is totally unachievable, whether we want it or not, whether we commit to it or not. It's just, you just cannot achieve it by 2050. It's just impossible. You'd have to mine the most materials that's ever been mined in history, and it's just physically impossible. So it just can't be achieved. So I think it's just totally unrealistic. So I think there's a lot of question marks about the whole thing, really. And renewable energy is the new government under Keir Starmer. They're claiming we're going to be a green power, and our energy cost is going to come down. It's going to be quite the opposite. If we do manage to have a lot more renewable energy, the costs are going to go through the roof. It's going to be very expensive for people to live, and very unreliable, as Carl just mentioned earlier. Some of these sources like wind and solar. I mean, in this country, can you rely on wind? Can you rely on sun? We haven't really had a summer, have we?
Yeah, I think
so. It's just not reliable. You can't help thinking that it does point towards nuclear, as you both said, and certainly France has achieved that very successfully compared to Germany, which is more down the renewable energy route. And also, as you said, Carl, Awet, you basically, if there is a potential of a world war with China, well, China supplies most of the materials you need for renewable energy. So, we're not making ourselves energy independent. Ed Miliband just announced that no more oil and gas, installations in the North Sea. So we're shooting ourselves in the foot. We're not making ourselves independent, but we're reliant on other countries that we don't want to be reliant on, that we could end up in war with, like Russia and China. It just doesn't make much sense to me. So I think the biggest danger we're facing is politicians of either party. Really, that seems to be the problem. There's not much common sense out there. But as the old saying goes, the problem with common sense, it's not very common. So that's what we're up against, I'm afraid. So anyway, I think you got some examples of renewable energy companies that we ourselves are invested in that you'd like to talk about.
We invested in this company, which is 50% in renewable energy, which is wind turbine, and 50% in the traditional for subsea offshore energy. The company name's Awet Technology. Since we invested in the business, it is up 75%. We are It's not a big business, but it's still growing and expected to grow. And they are expected to grow their expansion into renewable energy, especially when Labour government is here in power. Um, there's more opportunity for them to, because Labour is clearly is focusing on renewable energy to increase renewable energy. So the company would win in that term. And if you think about renewable energy, most companies, even like Amazon, is still investing in renewable energy. For example, Amazon recently announced a project for more than 500 projects around 27 countries. So indirectly, those companies are, they can see renewable energy is the future, and they try to source their energy from renewable, and they are trying to heavily invest in the space. um, Companies, for example, as well, because we could the renewable energy space is still early. There are indirect exposure as well. For example, to hyperscaler, we call them this big giant like Amazon, Google, and Microsoft for their cloud business and so on. What you have is they are investing in in semiconductors that reduce energy. You can argue this is actually indirect exposure, makes them more energy efficient in terms of increased speed and so on. So this is indirectly exposure for to invest in renewable energy companies as well, like companies like Micron, which is improving and making more efficient for data centers across the world, and companies like KLA. Alphawave is a small company in comparison to Micron, but they are working on for hyperscaler to make them more faster, and they use less energy. So it doesn't have to be directly through renewable energy, but it could be through indirectly make more companies more energy efficient as well. So there are few ways of investing in this space.
Interesting. I think it's worth announcing at this stage to our listeners that we've just started producing one-page summaries of companies that either are in our fund, the YFS Intelligent Wealth Fund, like the ones Awet's mentioned, and you've mentioned about 4 or 5 companies there, or companies that we'd like to invest in, but we don't feel for whatever reason that it's the right time to invest in it. So if you're interested in getting these super one-page summaries that Awet's designed, then just contact us. We've got lots of links in the show notes for things we've discussed today, including these one-page summaries. I think that could be quite useful to listeners. So there we are. Anyway, now we're moving on to recommendations, my favourite part of the show. So, Awet, what can you recommend of say a book or a podcast or video you've watched or read about recently that you'd like to talk
Yeah.
about?
Yeah, the podcast I listened to, I think that was a long time ago. It's the Investors Podcast, episode 505, The Price of Time. I think it was by Edward Chancellor. Edward is the price of time. What his argument is, historically everything has an opportunity and cost, and the opportunity is time. Well, that's why we charge interest rate for the opportunity cost. Historically, people have done that, and his argument is uh, uh, um, when interest rate is low, right? Historically, it creates financial instability. People tend to, inflate asset price. People tend to speculate. We've seen in Europe when we had negative interest rate in some countries, so that create instability, and people tend to go through Robin Hood and speculate and so on, and it creates financial disaster. I think that's his argument is historically, especially when interest rate is negative or around 2 to 3%. So his argument is always to make sure we have good interest rate policies in place that doesn't create bubbles and so on in the long term. I think it's really eye-opening about how interest rate should be structured in terms of because if you don't have the right way of structuring interest rate, what you have is economic instability, and that could be create more bubbles and so on and so on.
So, anything interesting you've seen or read or listened to recently, Carl?
Yeah, I'm just about to finish a book called The Nomad Capitalist by Andrew Henderson. And it's a really interesting book. I mean, we've got a problem in the West, haven't we, with taxes in particular. You know, we've spoken quite a few times on this podcast about the debt that the country's in, and it's only going to need more and more tax rises to help kind of cover the cost of that debt. So, yeah, this book's all about basically moving yourself offshore. Now, it's not to do something dodgy, it's all the legal ways you can effectively reduce your tax bill, whether that's moving your business offshore, whether it's moving your bank account offshore, or even your residency. So yeah, you could just be a person that likes a different country, likes a hot country rather than the sort of dull, rainy UK. And it's a really good book of putting steps in place to achieve that kind of lifestyle. And I think Andrew at one stage was a true nomad and didn't really have a home. He had a sort of 20 odd passports and would just kind of float around the world. And then he did get to the stage where he felt he needed a couple of bases. I think he now has sort of 2 or 3 homes in different countries. But it's surprising how easy it is actually to get second, third, even fourth passports. Sometimes it just requires a little bit of investment in a particular country. Within a year or two, you can have a passport in that country, which opens up travel destinations in other parts of the world. So, yeah, really good book for people that are considering leaving the UK and bringing their tax bill down.
Yeah, I think that's an increasing trend. It's been written about by Dominic Frisby not that long ago in a book on taxation he wrote, Daylight Robbery. It's predicting a rise to as many as a billion digital nomads in the future. You got a laptop and you got internet connection. You don't need to stay in the country you're in. It's quite easy to work abroad because a lot of work is office-based work is just online now. So why do you need to be in an office? So I just think that's quite interesting.
I think
But
the
he
internet.
touched on a lot of things, doesn't he, Andrew Henderson, in that book? It's not just taxation, is it? It's a lot of other factors like passports and offshore accounts and all the visas and all kinds of things. Really, I did see a very interesting visual capitalist infographic recently that showed bubbles, which showed different countries in the world which had the most departing millionaires. And this was before the last general election. And the country in the world that's got the most departing millionaires or emigrating millionaires is the UK.
Mm-hmm.
The country that's importing the most millionaires worldwide, have a guess. I think you can probably guess.
Yeah, Dubai maybe.
Dubai.
Yeah,
Dubai.
and Singapore. Yeah.
Which is not surprising because it's a country you can go to if you're a British expat, and you pay no taxes, no capital taxes, no income taxes. And if you buy a property, I think it's for $1 million in Dubai, you get a golden visa. So you get a visa for 10 years. So it's and the weather's nice. It's got a beach.
I think
like?
it comes to like what Carl mentioned earlier, to making regulation more flexible. I think if you don't accommodate people, especially millionaires, I think the wealthy individual, they tend to be entrepreneur, they tend to create jobs, they tend to support the economy, and you have to create a good tax system, a good regulation for them to accommodate them.
You basically Dubai got it right because what they're doing is they're attracting entrepreneurs, they're attracting wealthy people. And what happens when you attract these people? You create a lot more jobs for your economy and the wealth of all increases.
Yeah.
Whereas in the UK, we're shooting ourselves in the foot by increasing corporation tax by 30% under the last government, and also plans to change the non-domicile rule, which both things will only have one effect, and that's to drive entrepreneurs and businesses away from the UK and reduce investment in the UK and reduce jobs. Again, back to my comment about politicians earlier, that just doesn't make any sense at all. So there we go. Anyway, my tip for what I've read recently is The Art of Quality Investing by Compounding Quality. Apologies if I've mentioned this before, but I just haven't finished reading the book yet. I've just been so busy going to conferences, but it is absolutely brilliant book by well, it's claimed it's written by Compounding Quality. Basically, that's an alias for the writer, who's Peter Slegers, and his friend and colleague Luke, I think it's Kreutzer, Kroeze. He claims it's written by Luke Kreutzer. I think it's probably he's probably the ghost author, I suspect. But it doesn't matter. It's a great book on quality investing, the art of quality investing, and certainly something we subscribe to as a firm ourselves. So I really believe in that book. It's really, really interesting read. As I mentioned earlier, we put all the links in the show notes. We'd like to ask you to leave us a review for the podcast on Apple Podcast app, as this helps us rise up the rankings, allows us to attract more quality guests. I had the first interview recently with one of our guests, Tim Levine of Augmentum FinTech, and we're going to be inviting along increasingly higher profile guests for one-to-one interviews with me monthly for the foreseeable future. So just watch this space. I think any of the listeners will find it very, very interesting to hear these kind of successful investors speaking. So we've probably reached a natural conclusion of the show today. Thank you very much, Carl and Awet, for attending. As usual, I found it very fascinating. We always have very interesting discussions, and look forward to seeing you at our next episode. Have a great day, guys.
You too.
Take care.
Thank you.
You too. Bye.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.